Year to date, top 5 gainers on the JSE All Share Index. I'm going to give you just a moment. Just think of 2, 3 shares that you think have gone up in double digits. Who do you think the top gainers are? Put you out of your misery, if you like. Naspers, 38% up so far this year, from massive levels to bigly levels. Adcock Ingram up 33%. Murray and Roberts, it wasn't very high to start off with, but it's up 32%. Both Bidcorp and Clicks both up 27%. So it's been a good year for stock pickers, particularly if you pick those 5 stocks. This is the Moneymakers. I'm Bruce Whitfield. Tonight we're looking at the top 5 stocks by market share and whether or not they are worth investing. I'm joined by Ashraf Mohamed, Portfolio Manager from BUSHA Investment Group, and Michael Treherne, Portfolio Manager at Vestact. First, it's time to get the confessions out of the way. How many of the top 5 performers, Ashraf, are in your portfolio since the beginning of January this year? Or before?
2.
Which
Only
2?
So Naspers is in the portfolio, and so is Clicks.
Okay, so Clicks, so you've had an average of over 30% on just those 2, which is not bad.
But unfortunately, then the balance of the portfolio would be in financials, etc. So
But they'll come back.
no, I'm sure they'll come back.
One day. But you've got 2 of the top 5. Michael?
Also 2. So,
Which 2?
Naspers, of course. Vestact, we've been punting that one for a very long time. And then Bidcorp. They've done very well for us.
Bidcorp has been brilliant. I mean, it had a bit of a fumbly start and then didn't go anywhere for a long time and now has recovered quite nicely, up quite sharply on the year. And Bidvest itself hasn't done badly, actually. I mean, since the unbundling of Bidcorp. They've actually, the combined, the values, by splitting them off, the combined value is considerably bigger than the old Bidvest. Yeah,
well, the market didn't know what to make of it. So on the day of separation, Bidcorp went through the roof and Bidvest through the floor. And then the market was like, okay, that's not quite right. And then they've sort of come back together. And now, a year later, we're seeing Bidcorp taking off again as the international part of the business. They want to dominate Europe on the food space front, and it looks fairly exciting.
Okay, now we're looking at the big 5 shares on the JSE in terms of value, market capitalization. Those big 5, British American Tobacco, huge, it's smoking. BHP Billiton, Naspers, we know you both own that one. Glencore and Richemont. Now, so we know you each own one of them. Do you own any of the other 4 in a portfolio?
Yeah, so British American Tobacco, BHP Billiton, and a little bit of Glencore.
Okay, no Richemont.
No Richemont.
Okay, so Richemont's excluded. What about you guys, Michael?
Naspers, Richemont are the 2 that we have. Can't say we're a fan of the smoking sector.
You guys are quite nanny state about that. I mean,
Yes.
we refuse to invest in it, despite the fact that it's a great dividend yielder and it's a fantastic investment. It kills its customers, and we don't.
We
like
went
them.
one step further and we shorted it at one stage, and that didn't work out
That
so
was-
well. So we just stood on the sideline saying, let's not own it.
It's good to have principles, but just don't exercise those principles too aggressively. All right. So out of that, you've got 4 of the big 5. Is it worth adding to any 4 of the big 5? As we sit here tonight, should we tomorrow morning be picking up the phone or sending an email or going onto our share portfolios online and adding to any one of those 5 right now?
I'd certainly be adding to BHP Billiton at lower levels. So if
No, right now, not at lower
Right
levels.
now.
Right now.
Of those, I'd certainly add to BHP Billiton on a 5-year view, because I think over that period you'll see a recovery in the commodity cycle. Not as steep as we saw in the past 10 years, but I think you'll still see a moderate recovery in commodity cycles. They'll benefit from it. I think oil prices have found a trading level, despite the views that we'll all be driving electric cars in 5 to 10 years. I don't think that's going to happen. I think there'll still be a demand for fuel. And on the iron ore side, I think iron ore prices have found a range between $55 and $65 a ton.
But that's the only one you would be adding to.
So that is the only one I'd be adding right now. I think in the last week, Naspers has recovered quite strongly.
Such a good bounce, yes.
It was an exceptionally good bounce, but Naspers is a protected stock. I mean, it's got a fantastic moat called the Chinese government.
Yeah.
Does not allow competition. So while that moat is in place, Naspers is certainly going to be.
But you
one
won't
of those
add
stocks
to it
you
at
have to
2,700 Rand a share.
No, but
Okay.
I'll certainly buy it if it drops 10%.
Right. Okay, Michael.
Yeah, no doubt, Naspers for sure.
But you'll tomorrow morning. You're phoning up your broker, Paul, Sasha, buy more Naspers.
Yeah, for sure. I mean, I think people are still very concerned with Naspers PE, but I don't think that's the number that you need to be looking at. I mean, you look at like Remgro, you're talking NAV. You look at PSG, you're looking at NAV. Naspers is the same thing. It's moved away from being this media company that sells newspapers that profit number mattered. I mean, I was looking now before the show. At the moment, their 10-cent stake's worth $1.5 trillion. And
Naspers is worth 1.3 or something.
Yeah, so you're getting 10 cent stake at a 20% discount, plus everything else for free. And the OLX app is a top downloaded app in 22 countries around the world, and you're getting that for nothing. That delivery hero that listed in Germany during the month, that you're getting for nothing. You're getting the Flipkart asset, which is the biggest online retailer in India. You're getting it for nothing. Not to mention their DSTV assets and everything else. You know where I'm going with
the
this.
disciple of Naspers. Would you add to any of the others? I mean, you said that you've got some Richemont in your portfolios. Would you be adding to Richemont? It's just there's just a couple of little itchy bits, and internally we saw the head of the watch division, the guy who was potentially going to be taking. I don't have a Richemont watch, by the way, just in case you're wondering. It was just an action. The head of the watch division, potentially the next chief executive, left and went off to Breitling, for goodness sake. I mean, that must have been a little bit unsettling. And then the environment in which people are buying luxury goods is still not that lacquer.
Yeah, so lots of changes in the company internally. I think the company itself has struggled since China clamped down on the gifting culture. And the last quarter number that came out seems like they've sort of bottomed out and turned a corner. Mainland China, there's still lots of growth coming through, but I think the line that you need is what did Anton Rupert say, or Johan Rupert, men like sex and women like jewelry, and that's all you need to know, eh?
Let's leave that one there. So we're not adding any British. You're certainly not adding any British American tobacco. You're not adding any British American tobacco right now. It's just too dangerous to do so. You're not going to go into Richemont, and you're certainly not going to Glencore. Why are neither of you nibbling at Glencore?
You know, I think that Glencore is fairly priced at these current levels, and I think they've also taken on a fair bit of what I consider political risk. So the cobalt mines, which they bought in the Congo, there's going to be political change in the Congo over the next 2 to 3 years. Eventually, the president's going to have to step down. There will be elections, and I think the process that will happen post that is contracts will be reviewed and mining agreements will be reviewed, because Kabila has been there for almost 20 years.
Dad ended up in a pool of blood in the lounge, yeah.
Absolutely. So I think when there's a change in regime, those assets will be at risk, and that's been decent cash generators for them. Yes, the core business is still doing well, but I see a few political headwinds for that business.
Agree, Michael?
Yeah, look, I think especially for retail clients, I mean, if I had to say to you what's Billiton up over the last 5 years, it's up 5%, and over the last 10 years, it's down 5%. And that just shows you how cyclical commodity stocks are. And for most retail customers, we're happy holders when it's going up, but when it's on the way down, it's the worst company in the world. And I don't think most people have the stomach for that. So if I had to choose a commodity play, I think you go for Billiton, given its size and given its cash flows. Glencore's a lot more debt on the books. I don't know if you remember, end of 2005, Vestact come out with their notes saying that Glencore's going to zero because they've got too much debt, and the share price absolutely collapsed. They've recovered, but lots of moving parts. I think the big plus for them, though, is management have a big stake in the company, and they work 100 hours a week. I mean, who doesn't want to own a company where management have a big stake?
When you're not having to meet representatives of Tegeta and that sort of stuff, that's extra, that's overtime in Switzerland. Okay, I need one more stock pick from both of you, from outside of the top 5 market cap on the JSE, that will outperform for the rest of this year the top 5 on the JSE. That includes, of course, Naspers. If you think that Naspers has got another 30% in it this year, which it might have, depending on what happens in China, then you're not allowed to pick it. But one more stock from outside of what we've been talking about this evening that you think will outperform all of what we discussed. Michael.
Look, I'm going to go with famous brands, a bit of a left field one. Had a rough year.
That's courageous.
You have to be bold in this show, Bruce.
Yes.
They've had a rough year so far, and that's partly due to not having a dividend because they're paying down that GBK asset that they just bought. But the top-end brands are still doing well. Tasha's keeps growing. You walk past Tasha's in Morris Arch. And
there are 12 of them, and they don't get to keep all the profit.
It's still a great business. They're expanding into the rest of Africa. GBK is going to come right. It's going to start contributing.
GBK is the Great Burger Kitchen or Grand Burger Kitchen or Gross Burger Kitchen or whatever it is in the UK.
Amazing burgers. Sasha was there during the year. He said it was great.
Did he have one for the team?
He had one for the team. Market research, company card.
Expensive.
Yeah, there we go. But I think they start introducing the dividend back again. All of a sudden you've got a 3-4% dividend yield on the company. They're looking at the higher LSMs with the brands that they focus on. So the guys that still have cash in the market, and millennials are coming through, and research is showing that millennials like to eat out, and these guys are focusing on the right areas.
Cool.
So I think that
famous brands will take.
They're going to bounce, Bruce. They're definitely going to bounce.
They're going to bounce like a burger patty, right?
Okay.
Ashraf.
Mine is Vestact PLC. So
that's
very boring, yeah.
No, but it's interesting because it's, what is it, in sort of low 90s right now?
It's in the higher 90s.
Higher 90s, and
given the run we've had in the market, and I still see further upside in the business. I think
in 6 months,
people have underestimated the value of the wealth business. It's become a bigger contributor, as well as the asset management business. So I think those two, if they can be valued at fair value, because I think they're both undervalued, that will give an uplift.
What about the Brexit effect? What about the Brexit effect?
I don't think the Brexit effect has any impact on them. None at all.
Courageous choices this evening. That's what we like. We like courage. Courage and bravery. Same thing. Michael Treherne, portfolio manager at Vestact, who is a holder of Naspers and of Richemont, adding, interestingly, to Naspers tomorrow morning. That's what he's going to be doing. And also going and buying some famous brands to put his money where his mouth is. Ashraf Mohamed, portfolio manager at BUSHA Investment Group, is going to be adding to BHP Billiton with a 5-year view, and then throwing some Vestact PLC into the mix for good measure. Value is a tricky thing to pin down, and the way that often elusive, you need to get a better portfolio manager. Maybe you want to consider one of these fine, upstanding gentlemen, or maybe you want to wait 6 months to see how their picks perform before you do that. Until the next time you watch CNBC. Thank you for watching. Bye-bye.